All right. Well, good morning, good afternoon to folks. I'm your host. My name is Eric Groves, and I'm the co-founder and CEO of Alignable. We're excited to have you here today to learn about lending solutions available for women and minority-owned businesses. For those of you who have not attended an Alignable webinar in the past, it's an ongoing series where we bring in experts to help business owners solve their most pressing business challenges. Our goal for the series is to educate you about the options you have, so ultimately you can make an informed decision based on what's best for you. We're thrilled today to have these three guests with us. Denada Ramnishta, who's the General Manager and Head of Corporate Strategy at Lendio. Luz Urrutia, who's the CEO of the Accion Opportunity Fund, and Victoria Guerrero from the Small Business Administration. Today, we're going to start off our discussion hearing from these three experts on the lending challenges minority and women business owners face, along with solutions from their organizations and other places, how fintech companies are evolving and innovating and making access to capital easier. We're going to touch a little bit on government contracting, which is kind of related in a sense because it's actually a great source of income and revenue opportunity for women and minority-owned businesses through the SBA. So we're going to touch on that a little bit. And then we're going to chat just briefly about how to differentiate between responsible lenders and scammers, because we know there's a lot of folks out there that aren't necessarily the best folks to be picking from a lending standpoint. And then after we go through those topics, we're going to open it up and have sort of 20 to 30 minutes of Q&A where we can answer your most pressing questions from these great experts that we have. Before we begin, a few general guidelines for today. We've had like 3,000 people registered for this event, and we've already got almost 650 in or 620 in so far. So we may not get to everyone's questions, but have no fear, we will have some other paths where you can actually get these questions answered. But do use the Q&A box at the bottom of your screen to post any questions that you have for our panelists, and we'll get to those in the second half of the session today. If you have a specific question we don't get to, we'll also provide a link in the chat with information on how you can reach out directly to Lendio, to Axion, and to find a small business, for someone from the Small Business Administration who can help you with your question. We'll also post a link to Alignable Small Business Lending Group, which is a group that we created on Alignable where you can go and ask additional questions, learn from experts, and provide your own expertise in that chat group. And we hope you take advantage of it. As I mentioned earlier, throughout this presentation, if one of our panelists mentions a URL, we'll also try and post that URL into the chat, so it's there for you to just take a quick copy of for yourself. Also, please do not put any personal information about loans or business revenue or anything like that into the Q&A, because that is a public forum and everybody can see that. All right, so let's get started with some brief introductions. We'll start off with Luz from the Accion Opportunity Fund. Why don't you go ahead and kick it off, introduce yourself, and provide a brief overview of what the Accion Opportunity Fund is all about.
Absolutely. Well, good morning, everybody, and thank you so much, Eric, and rest of the panel for this great opportunity. I am Luz Urrutia. I'm the CEO of Accion Opportunity Fund. We are the nation's leading nonprofit community development financial institution known as a CDFI. We provide affordable loans, business advising, coaching, and support networks to small businesses, mostly owned by people of color, women, and immigrants. We've been around for 28 years, and we are headquartered in San Jose, California.
Fantastic, Luz. And before I move on, could you just tell people just real quickly, what is the difference between a CDFI and a traditional bank?
So a CDFI is a sort of a nomination or a certificate that the Treasury Department gives to institutions that are focused on providing capital to lower, low-income communities and disadvantaged communities. So it's really a certification from the Treasury Department. There are other lenders that provide those kinds of services that are not necessarily certified as a CDFI.
Fantastic, thanks. I've always wondered that. Appreciate you sharing that. Okay, so let's switch over to Denada from Lendio. Can you introduce yourself and share a little bit about a brief overview of what Lendio does?
Yes, great to be with all of you. So Denada Ramnishta, I lead our technology business here at Lendio, as well as corporate strategy. So Lendio is the largest small business marketplace that connects small businesses to the appropriate source of capital. So we're a pure marketplace. We are not a lender ourselves, but we enable the connectivity of small businesses to lenders, depending on the type of loan that they are seeking or risk profile that their business presents. And we're very, very passionate. Our mission here at Lendio is to fuel the American dream. And I'm personally a fierce advocate to ensure that we democratize capital and allow small businesses to have access to capital across the spectrum. And what I would add on Accion Opportunity Fund, as we were talking about CDFIs, they're mission-driven organizations. And we at Lendio are proud to work with institutions like the Accion Opportunity Fund.
Fantastic. Thanks for that overview. And now we'll head over to Victoria Guerrero, who's here representing the Small Business Administration, who you may recognize from many of our past webinars. But Victoria, take it away. Give a little background on yourself and your time with the SBA.
Absolutely. Thank you so much, Eric. Always an honor to be here. And thank you to my fellow panelists. An honor to be here with you today as well. Good afternoon, everyone. I'm Victoria Guerrero. I'm here representing the SBA today. And as many of you know, SBA has been very popular during the pandemic with all of our COVID relief programs. But I'm here to also share with you that SBA is here with you throughout the year, not just only in times of disaster or pandemic. We are here to help our entrepreneurs start their businesses and grow their businesses. We have a multitude of various programs. Today, we're going to be talking about access to lending and capital as well. But we also have other programs, and I welcome you to go to sba.gov and kind of take a look at all the sorts of services and programs that we offer to our small business community. So thank you so much for having me here today.
Fantastic. Thanks, Victoria. Well, let's kick things off with a quick discussion, or not a quick discussion, but a deep discussion about the common barriers that women and minority-owned businesses face when applying for funding. And, we noticed this throughout the past 2 years, even when it came to access to the PPP funding, that minority-owned businesses and women-owned businesses, in many cases, were hitting barriers that other businesses were not. And really wanted to understand from your perspectives, and we'll start with Luz, really, what did you see, or what have you seen in terms of the barriers that women-owned businesses and minority-owned businesses are facing as they go to try and access capital for their business?
Sure. So I'll start. Even before the COVID pandemic, small businesses, particularly those owned by people of color, women, and immigrants, we're already facing significant challenges when trying to access responsible loans and capital. These businesses have been left behind by the traditional financial system, and it's for a variety of reasons, including the borrowers may lack a credit history. They don't have traditional documentation. They haven't been in business long enough. The size of the loan might be perceived too small for the lender because they don't think that they can make that loan profitable. The lender's credit boxes are not expansive enough to look beyond just the credit score. They may not lend to certain industries and frankly, other systemic barriers. We see that credit scores are a major factor in financing. For traditional lenders, the price of a loan is generally determined based on the credit score as the single measure of and because many immigrants come to America with no credit score, obtaining a loan is really impossible. And I can attest to that myself when I first came to the US. And then when credit is available to someone with no credit, or what we know as a thin file, many lenders will charge exorbitant rates because these customers or borrowers are perceived to be much riskier. Whether that's true or not is to be debated, but that's the reality. You know, this is a common challenge for women. Women entrepreneurs also have lower credit scores than men, about a 15-point differential between their averages. And this disparity, we believe, is due to the long-standing inequities like the gender wage gap, which probably contributes to the disproportionate debt to income ratios and credit utilizations between genders. You know, women have a very difficult time getting the capital they need to start and grow their businesses. And once they get approved for debt funding, it is at a much lower rate than men. Women only get 4% of commercial loans that banks offer, and 2% of venture capital funding. So I'll let that sit there for a minute. What's even more disturbing is research from Fundera has shown that women are likely to pay higher rates and receive less debt funding than their male counterparts. So basically, women entrepreneurs ask for less money but still get turned down more. Significant challenges.
Wow. Well, Victoria, the Small Business Administration for years has worked hard to try and help overcome some of these barriers. Are there specific programs that folks should understand about, or places at the SBA where women-owned businesses and minority-owned businesses can try and level that playing field a little bit through resources that you guys offer?
Absolutely. We do have a myriad of lending programs, and I think we might get into that a little bit later, but I would suggest for folks to kind of take a look at a program called the Community Advantage Pilot Program, also microloans, and, you know, my colleagues, you know, here, Luz and Denada, I'm sure they can speak on that as well. But I also want to remind folks that the Small Business Administration has resource partners. And these resource partners are also there for you. They're all across the nation to provide you with one-on-one counseling on any challenges you may have with your businesses. They are very aware of all of our programs, and they can help you with the programs that we offer to see which one would be best for you. Specifically, we have our women business centers across the nation. We also have our small business development centers, and we also have our WBCs for Women Business Center, SBDC, and we have our Veteran Business Opportunity Centers as well, and we have our SCORE chapters. So these are resource partners that are all across the nation, as well as our SBA office. And for you to find the closest one to you, I would recommend for you to go to sba.gov/local-assistance. And you can put your zip code, and it's going to give you all of the resource partners that are near you, as well as all of the SBA offices that are close to you with all the contact information. So it's a great resource to have. A lot of the programs and services are at no cost or very low cost through our resource partners, but I would really recommend for folks to kind of take a look at our website and go to sba.gov/local-assistance and find those resource partners near you.
Fantastic. Well, Denada, let's talk a little bit about innovation, because you guys are known as sort of being one of the most innovative new financial companies out there. And the barriers that you saw, or Lendio saw, that really you've tried to address through technology. But it'd be interesting to sort of get your perspective both on the challenges that you see, and then follow that up with sort of how you as an organization have used technology to try and overcome those challenges. It'd be great to kind of hear both of those from you. So take it away.
Yeah, no, I appreciate it. So Luz really clearly outlined sort of the embedded disadvantages that women business owners and people of color have, right, to begin with. But the other thing that I want to add to that is those embedded disadvantages from that one starts off, then create what I call a systemic bias that continues to perpetuate. And that's when the alarm has to sound, right? So for us, we really have to recognize it isn't just the mere embedded disadvantage from the beginning, but then the perpetuation of the systemic bias onward, right? And how do we shake that off? So Eric, to go back to your question, as a technology company, primarily here at Lendio, we rely on technology and invest in technology to help aid to remove some of that systemic bias, right? To basically bring to light other variables that lenders can underwrite upon and reduce and almost remove fully reliance on a FICO score, which isn't necessarily a direct predictor of performance, right? So at Lendio, we have hyper investment around enabling technology to allow financial institutions to remove systemic bias. We know that there is bias in humans underwriting, right? So how do we get some of that technology as part of the process so that systemic bias continues to be reduced and hopefully eventually eradicated, is my hope. So that's where the focus is for Lendio, is to collaborate with our lender partners to find ways that we can leverage different variables to underwrite businesses that traditionally could not be underwritten because of that systemic bias.
And do you find when you're talking to these financial institutions that they're hyper aware of the systemic bias that's in the system, or are they in denial? Or how do you find them? I'm sure there's a range, but what do you think with the different institutions that you work with?
So there is absolutely a range, but I think that we're moving in the right direction in recognizing, because the data is showing us. I mean, look, 4% of funding alone, it's going to women-owned. I mean, we have to face fact. The data is showing us that. But in terms of awareness, you've got financial institutions who are fueled to reduce that systemic bias and allow more open access to funding, such as the CDFIs. They are actually fueled by that very mission. Not only do they recognize it, they're going head on to face it. You also have larger financial institutions that do, frankly, in concept, want to do the right thing. But when something is embedded in the system, it does take time. And in order to eradicate it, somebody has to make a decision to say, we will eradicate it. It can't be just acknowledge it and sort of inch along the spectrum. Now, one could say, well, how does one eradicate it? Collaboration. What we do here between financial technology companies and traditional financial institutions coming together to face fact and decide to make it better. So awareness is there. I think we need to do more from the FI side, in addition to the CDFIs, to really get to the bottom and shift course here.
Fantastic.
And then the other thing I want to add is the SBA has always been there for small business. I think small business now has been uber aware through Paycheck Protection that the SBA is there. So my hope is that there will be greater involvement of the SBA in the process to help aid the true small business segment.
Fantastic. Well, Luz, you're on the front lines of all that. She set you up wonderfully. Can you share a little bit about the pioneering work that you guys are doing in terms of what are you bringing to the market that really is helping to sort of set the new course for the way loans should be given, and and share a little bit more about some of the programs that you've been working on?
Sure. So, as a CDFI, in all fairness, and a nonprofit, we have the flexibility of having a much more expansive credit box. And talking about what Denada was saying, credit score is something that we pull, but we don't necessarily use it to make a final credit decision. There are a number of other variables that we look at. We look at what we call the 4 C's, right? So the character, for us, moral collateral is frankly more important. The moral collateral of the business owner is more important than any kind of hardcore asset collateral. We look at cash flow. Is the business, how is the business doing? What is the cash flow? Does it have the capacity to pay the loan that they're asking for? And what is the right size loan that they need? What is the credit that they're looking for? And what is the purpose? And how can we structure that better? So we take time to spend, we use technology to do a lot of the things that technology can do. And then for those borrowers that need a little bit of extra hand-holding, they have a business advisor, a coach that can help them through the process with a loan, or alternatively with coaching, with business advising, with bringing support networks, because we have found that both capital and that type of support is really what helps drive business owners to succeed. I think that this pandemic, it's really disappointing that it took this major bomb exploding to give the recognition to small businesses that small businesses deserve for the amazing work that they do and how they build our neighborhoods and create jobs and generate economic activity. But I would say that during the pandemic, some very transformational community development lending models have been created that I believe have the chance and the opportunity to really change small business ability to access capital. One of them we were part of creating was the California Rebuilding Fund. It is a public-private sector partnership between CDFIs, banks, philanthropists, the state of California. And this fund offers very flexible, low-cost loans up to $100,000 with free business coaching and technical assistance offered by Accion Opportunity Fund and other CDFIs to small businesses that are looking to build back from the pandemic. The fund is available, so I would encourage everybody to apply for loans. There are certain criteria. You can go to their website, California Rebuilding Fund, and check them out. 86% of the initial loans that were funded through this partnership are for businesses with less than 10 employees. And most of them are businesses that are underbanked in low-income communities and that have historically lacked credit. There's a similar fund called the Southern Opportunity and Resilience Fund. We're also part of that fund. It's also a collaborative, also making loans up to $100,000, providing free business support in 15 states throughout the Southwest, Southeast, and up the East Corridor. I think that, the other thing that we're very focused on is continuing to make sure that lending institutions are transparent, are equitable, and accountable when lending to these underserved and overlooked businesses. We're focused on making sure that Congress passes the Small Business Lending Disclosure Act. We're going to talk about this later, but this bill is really going to amend what we all know as the Truth in Lending Act to extend the same kind of protections for consumers to small businesses. Today, that bill requires that consumer creditors disclose all the terms of the loan. Unfortunately, those same protections are not available to small businesses. And then last but not least, what Denada said I can't reinforce enough. One single organization cannot solve the huge need and gap for small businesses. That's why we partner with organizations like Lendio, why we offer loans through the SBA, so that we can expand the access to capital, because not all businesses are created equal, and the solutions that they all need are not equal.
And Luz, you mentioned that there was a number of these rebuilding funds created. What's the best, is there a resource that kind of lists them by state, or is there a place on your website where they can go to sort of see the ones that you're a part of? What's the best way to learn more about those? Because it does sound like it goes state by state in terms of the availability.
Yes, we list them on our website. The California Rebuilding Fund is one in California, and then the Southern Opportunity and Resilience Fund, SOAR, is in 15 states in the Southeast. There are others across the country, in Washington State, in New York, in Illinois. These are the ones that we're part of, but I would encourage small businesses to look for those funds that are very, very effective.
That's fantastic. That's one way of trying to level the playing field. Another way is really through small business SBA loans. And the fact that, some people think, oh, an SBA loan, I go to the SBA and they actually give me the loan. So I'm going to ask you, Victoria, to kind of clear the deck on that one. What is an SBA loan? What does it mean for a business to get an SBA guaranteed loan? And how should one go about finding them?
Absolutely. Thank you so much, Eric, for that. So yes, some people think that when they say SBA loan, that it's the SBA itself that we're giving out loans, but we're not. What it really is the SBA guaranteed loan, which means that we have, a list of lenders that are part of our SBA program, if you will. And what they do is that they are the ones that will provide you the actual funding. Now, that loan that small businesses receive, it's guaranteed by the SBA. So what does guaranteed mean? So basically, depending on the loan, a loan can be guaranteed up to 90% or so if the borrower defaults on that particular program. So what happens is we guarantee the bank that the funding will be repaid if in an event that does happen. And what that does for the banks is it gives them a little bit more ease to be able to lend that funding to those small business owners. So that's basically what it means when we talk about SBA guaranteed business loan. Now, of course, you can always go to our SBA website and take a look at all of the different types of programs we have. But what I recommend is to speak to organizations such as Accion and Lendio. You can also go to sba.gov/lender match. And it's basically a system that you put your information, how much you're looking to borrow, and it'll give you a list of the lenders that are approved by the SBA in your area. So you can contact them directly and apply with them in that location. Now, I do also want to state, earlier I spoke about our resource partners. I also want to remind folks that we have our Community Navigators pilot program. Now, our Community Navigators pilot program was created specifically to be embedded within these underserved markets. And there are actually an extension of what the resources that the SBA offers. So our community navigators, they speak multiple languages, they understand the culture and the nuances of different cultural aspects. So they are within our entire nation. And again, to learn more about these programs, because this is a resource that you can utilize, you would go to sba.gov/navigators. And that's also another way to kind of try to start to bridge that gap. A lot of small business owners, they need a little bit more understanding of government jargon and the programs and how it works and kind of one-on-one coaching. So our resource partners provide that, but also our community navigators do too.
Fantastic. And Denada, if I'm looking for an SBA guaranteed loan, is that something that I could turn to a company like Lendio for to try and find that type of loan, or do I have to go to the bank directly?
Yeah, so that's kind of the interesting part of the Lendio business model, that all business loans are available within our marketplace, and we have different lenders within the same loan category. So for SBA loans, as an example, we have an array of lenders who offer SBA loans, and we have matching algorithm to figure out, given that particular customer profile, which lender would be best equipped to service that customer and provide a smoother customer experience. So yes, Lendio offers, among many other types of loans, SBA loans, those that are considered micro SBA loans, or below 350 and 350 and above.
So that's really great to know. So when you're going to Lendio, you're not going to apply for a loan from Lendio. What you're doing is actually to explore the whole canvas and say, given what my business is all about and what I'm looking for, help me find the solutions that might match with that. And that's sort of the service that you provide. And then you direct them to the path to the best solutions. Is that right?
That's absolutely correct. So when our founders found Lendio, they very clearly understood that there is this disconnect in the small business community, in this lack of understanding of where do they fit, Luz mentioned the credit box, right? Different lenders have different requirements and credit boxes and eligibility criteria. So Lendio is that platform that does that filtering on behalf of the small businesses to determine who are the lenders that are best equipped to service that particular customer. And we, on behalf of the business owner, work with the lenders to obtain the offers. So the business owners aren't interacting with multiple lenders. We're doing that. Our funding managers are doing that on their behalf, and then communicating back to the business owner what their options are.
Fantastic. So I'm going to kind of shift gears just a little bit because I think this came up in one of our past webinars with Victoria, where access to capital is one of the things that is sort of paramount to being able to be successful in business. But there's this whole other opportunity around government contracting that I think is really interesting to at least understand. And with the 1.879 trillion, whatever it was, dollars that were earmarked to come back into the economy through government purchasing programs and investing in infrastructure, there's an enormous opportunity for small business owners to get a piece of that action, if you will. And I was just hoping, Victoria, that you could just touch on what is government contracting, how does it work? And then we'll also let folks know that in a week's time, February 4th, we're actually going to do a seminar just on government contracting. So if this is something interesting to you, go to our events page and you can actually just register for that event. But just give a highlight, Victoria, if you will, of what is this whole thing all about?
Absolutely, would love to. So we have a federal contracting program. It's a program that is really utilized to help small business owners, grow their business within the federal contracting arena, if you will. Some people may know and others may not, but the federal government, we are the #1 purchaser of anything that you can imagine. It can be paper clips, paper towels, military items. You name it, we probably do purchase it. So it's a great avenue, if you will, to sell your products or your services to the federal government. Now, we do have different programs, different certifications that we give to small businesses, but one thing I do want to highlight today is what we call our 8A federal contracting program. This is a program that is a once-in-a-lifetime opportunity for minority-owned business owners to sell their products and their services to the federal government for a period of up to 9 years. So it's a wonderful program to help small businesses grow within the federal government. And then after those 9 years, you launch off and you continue to grow in your private sector as well. So to learn more about federal contracting, I really recommend you to go to sba.gov/contracting. It'll take you directly to our webpage, and there you can see the different types of certifications that are available, different types of programs that are available. One thing I do want to mention is, we have different certifications. For example, it's very relatable to this group. We have our Women Business Owned certification. So if you get certified as a women business owned business, you can partake in our federal contracting program. So again, there's a lot of different certifications. I would recommend everyone to go to our website, sba.gov/contracting, and kind of take some time and look to see and learn more about these certifications and about our government contracting program.
Fantastic. Thanks. And thanks for that tangent there. We're going to come back over to the lending side and really touch on the darker side of lending and the challenges in trying to figure out what is a legitimate source of a loan versus a scammer that's out there. And was wondering, Luz, can you kind of touch on that topic and help people understand, how do I trust the lenders that people are, the opportunities that people are putting in front of me for borrowing money?
Sure. So, many small business owners have been led to believe that they don't qualify for an affordable loan. And they believe that if they're going to apply, they're going to get denied. And so as a result, they resort to financing that really causes more damage than good, as they seek alternative forms of loans that are higher cost and not good for their business. What we've seen in many cases is how small businesses turn over access to their bank accounts and the cash that they collect to some unscrupulous lenders. And then they charge their accounts and threaten them when they cannot pay for high fees. We did research several years ago that found that unregulated lenders were charging an average annual percentage rate, APR, of 94%. And for Hispanic borrowers, it went as high as 400%. And the same thing for Black-owned businesses. It's just like subprime mortgage lending and how they target certain communities. And some of the most irresponsible lenders include some of the online lenders and merchant cash advances that are offering what it's equivalent to a payday loan for a business. So for many small business owners that are unserved by the traditional banks, they believe that only high cost products is their option. And that's not necessarily the case. It is critical that small businesses evaluate all their options very carefully and always take time to read the fine print in the loan agreements before you sign. And we think this is even more important now than ever because we saw this after the Great Recession in 07-08, when a new set of lenders were created. Some were great and responsible. Lendio is a good example of that. And some were predators. And every economic crisis gives rise to a new set of lenders and small and business models. And we don't think it's going to be any different this time around, particularly because small businesses are fearful about their future and more vulnerable to accessing bad loans. There are a lot of lending options, responsible lenders, CDFIs like we've talked about, fintechs like Lendio, merchant cash advance, SBA, and others. But whether you go to a fintech or you go to any lender, the most important homework that any business owner can do, but particularly women and businesses owned by people of color, since it's so much more difficult for these populations to get access to capital, make sure that the product solution is the right for you, that you're clearly understanding the terms of the loans, that you're not overpaying, that your business can afford the loan because you want to be successful with the credit and not, put your business under stress, and that you're working with responsible lenders who are giving you transparent terms with no hidden fees and penalties. I would encourage all of you listening to Google the Small Business Borrower Bill of Rights to learn about responsible practices that a lender needs to follow and see the list of lenders that have signed on to this Small Business Borrower Bill of Rights. If the lender you are considering is not on that list, that's okay, but ask questions. Have them share what is the total cost of the loan, what is their APR, which of course is a combination of the interest rate and other fees, what are their repayment terms, and what does that mean for your business? A lender that is not willing to invest time with you, answering your questions and making sure that you get the best loan that you can afford, then think about looking somewhere else. There's a lot of options out there. Do not get hooked into something that's quick, but may not be the best long-term solution for you.
Great. And Denada, when you think about that from a Lendio perspective, what additional services or people do you have available? I'm a business owner, I come to Lendio, I put all my information in and I get all this information back. Are there things that you do to help me become comfortable with the fact that the people that I am about to commit to getting money from are legit? And are there people on your team that folks can turn to call and talk to and make sure that everything is legit before they move forward?
Yeah, so the sort of the strength of the Lendio model is that it couples the use of technology with what we call the smart human touch, which is, I think, imperative in business lending. Not necessarily in consumer, but in business lending, it is very, very important. Why? There is an array of different business loan types and options, and business owners don't always understand all of them or the terms or what is it that they're getting into, for lack of a better way of saying it. So at Lendio, we inject the educational component to explain that when a business owner has multiple offers, what does each of those offers and loan types mean for the need that they're trying to address within? Because each different need has a different solution, right? A loan isn't created equal. Even the length, the term length, isn't necessarily the same or shouldn't be the same, depending on the need that the business owner is trying to fill. So part of our process is to ensure that we are educating borrowers on what the terms of the loan that they're getting into is available. What's in front of them? What are their options? And my advice to business owners would be along the lines of what Luz emphasized: know your options. Don't necessarily settle for something that's in front of you just because it was given to you. You might have additional options. Do your homework and really, really, really look very carefully at the terms of the agreement that you're signing and getting into.
It's a great advice, and I think doing your homework. Sometimes you need someone who's a professor to kind of help you out. In the Small Business Administration, Victoria, can you just sort of touch on some of the resources that are available locally that business owners can turn to just have another person to bounce ideas off of, with some of your, directly with the SBA, but also with the partners that you have, the free resources?
Sure, absolutely. Thank you for that. So of course, we kind of already touched on the fact that we have SBA offices all across the nation, as well as our resource partners, which is the small business development centers, our women business centers that tailored, specifically for women business owners. We have our veteran business opportunity centers for those that are veteran owned. We also have our SCORE chapters, and our SCORE chapters, it's also a wonderful organization that they will work one-on-one with you on starting your business and launching your business. And it's an organization that's made up of volunteers who are in the industries that our business owners are. So they will match you to someone who is in your specific industry. It's a great resource to go to as well. In addition to that, as mentioned, we have our Community Navigators pilot program, and these are organizations that have been chosen throughout the nation, who are embedded within the minority market area, to really help our underserved markets in learning how to start your business, how to grow your business. All of these resources are there throughout the year, not just when there's a pandemic or not just when there's a crisis or an emergency. We are here throughout the year to help our small business owners. And, Eric, a lot of times people say, what are the two things or the top three things that you can recommend for small business owners? And one is to make a relationship with the SBA, really understand the programs that we have, learn that you can go to our resource partners. Our resource partners are there to assist and to help you with anything, and always have a good relationship with your bank or your lending institution, whether it's, if you're working with Accion or if you're working with Lendio or a traditional bank. Really have a good relationship. And no one can ever underestimate the power of networking, and you really seeing outside and seeing who else can be there, such as Alignable. You guys have a wonderful platform here to help small businesses connect with one another and network and see what other resources are out there. So one of the things I always recommend, know what resources out there and go and get them. Don't be afraid to ask questions, because if you don't ask questions, then you won't move forward, and we want you to move forward.
Fantastic. So let's jump into some of the questions, because we've got quite a few, and I'm going to try and put them into some buckets for you guys. One of the questions, or a series of questions that we're getting quite frequently, and Victoria, you've heard this before, is I'm a new business, right? I'm just getting started, and a variety of different industries. But what sources of capital are available to women or minority-owned businesses that don't yet have revenue? Right? They're just trying to get started, and they need that sort of seed capital to get the business off the ground or to acquire a business from somebody else. Where do they turn to? And is a traditional funding solution a path that is available to these folks, or do they have to be in business for a period of time? And if so, how long? Really long question, and I'll toss it over to Denada for try and answer all that.
Yeah, well, SBA specifically does offer loans. I know it's not common knowledge, but non-collateralized loans. They're small SBA loans. And there are lenders that, as I noted before, who will underwrite outside of the cash flow variable, and they will leverage other potential collateral to underwrite upon, right? So there is opportunities there. Now, I have to recognize that they are fewer, right? It is harder to obtain a loan when you are just starting off, but the opportunities do exist. And SBA is a great resource for that as well, especially for those businesses who are pre-revenue, right? Loans under 25K, so these microloans from the SBA are offered to those that don't have revenue and don't require collateral in order to be underwritten.
Great. And Luz, what from a CDFI's perspective, what is the sweet spot for when you will start to lend? And do you have programs for startup businesses?
Yeah, so, pre-COVID, it was 1 year. For generally, you'll find banks are looking for 3 years of, in business before they will give you a loan. For CDFIs, generally is a year. Post-COVID, we have brought that down, particularly because we're seeing a lot of new businesses starting that revenues are lower. And so somewhere between 3 to 6 months.
Gotcha. And Victoria, do you want to touch on some of the programs that are available to early stage businesses?
We spoke briefly already on the Community Advantage programs, and we also have our microloan programs. And specifically Community Advantage, it's a pilot program. It's been extended to September 2022. So I recommend folks to go to our website and kind of, take a look at our Community Advantage program. But basically it's for minority-owned, underserved markets, such as, the women-owned businesses, also for businesses who are looking to, for startup capital to start your business. This program, as well as our microloan program, is good. With Community Advantage, I think that the maximum you can request is $250,000. But what's nice about the Community Advantage program, as Denada and Luz already alluded to, sometimes when we want to start our business, we may not have the credit that we need for a variety of reasons. And the Community Advantage program is something that is created to help individuals that are also in that particular category. So I, truly recommend to kind of take a look at that from an SBA perspective. And I don't know, Luz or Denada, if you want to speak a little bit more regarding these programs. I know you guys manage them and review those applications as well.
Luz?
Denada, go ahead.
We actually, with the particular program that you're noting, we are not participating actively outside of providing educational materials on our website and directing people oftentimes to the SBA for those resources. So it's more of an educational effort on those programs.
Great. And so one of the questions we have is, does everything have to be a loan? A lot of small business owners still need grants. Unfortunately, the large grant programs have now sunsetted as of the end of last year. But are there still the sort of small grant pools of money that are available to women-owned businesses or minority-owned businesses or veteran-owned businesses that are out there? Victoria, I guess I'll go to you on that one.
Well, and Eric, you hit it right on the nose. A lot of our grant program was COVID related, and many of those programs, if not all, they've already sunsetted and they have completed. At this time, we don't know if there's going to be any other grant programs coming forward, but we never know. It's really up to Congress to decide. But what I do recommend is, there's a lot of different entities out there that offer grant programs, and also SBA, we have programs, which is our Small Business Innovation Research Program, and we have our SBA, Small Business Technology and Research Program. So some of these can be grant-based, but you would need to be within specific parameters and specific industries in order to take advantage of those. But again, I would say to kind of keep your eye on the SBA. We never know what programs might come. We're still, going through the pandemic, and we want to provide all the resources available to our small business owners so they can, bounce back post-pandemic and post-COVID and be in a good place when they do.
Fantastic. So a couple of questions for you, Denada. One from Laura, who's a broker who's focused on bridging the gap between women and minority-owned businesses and capital. Does Lendio partner with brokers?
We currently do not partner with brokers as a referral source. There was a time when we were working with brokers, but we currently are not because of our model being sort of a brokering model itself, even though it's a lot more than that. It's called consultative and in nature. We just feel like, it's sort of a double consultative approach, because I'm sure Laura probably consults her businesses as well. She can refer to Lendio. We just don't have direct relationships with brokers.
And one of the questions is on Lendio is when you use their services, what is the cost? What is the fee structure, and how does that work?
Yeah, so Lendio charges lenders an acquisition fee. So each lender to acquire a customer has an acquisition fee, but there is no cost to the borrower to use the platform. So it is a free matching service to the borrower, to the small business.
Fantastic. And Luz, coming back over to you, is there a minimum credit score for the Accion Opportunity Fund?
We tend to go much lower than other lenders, again, because of our expansive credit box. It really depends on each individual business owner. And that's why it's important, one size doesn't fit all. And so my recommendation would be that folks apply through our aofund.org, and, that they're going to get a straight through experience and ability to talk to somebody on the phone that can help them through their particular situation. What Denada said earlier, it's a combination of technology enabled and high touch customer service. And for the businesses that we work with, we see those two coming together. And that's why we want to work with each customer individually to help them solve their individual needs.
And so one person touched on the fact that they're an African-American woman-owned business who is trying to gain access to capital and was sort of denied access, and wanted to sort of know, is there someone that she can speak to try and understand why the denial was given, and what's your process for that, and who should they reach out to at Accion?
Absolutely. We have, and we can, I don't know how we could put this on the chat, but we have a 1-800 number. We have a call center. It's open 7 days a week, 15 hours a day, attending people in multiple languages, Spanish and English primarily, and they can call and specifically ask what happened with their loan, and they're going to get somebody on the other line to talk to them.
Fantastic. Well, we'll make sure we include that 800 number in the recap that we send out to folks. Does Accion lend nationwide, or is it just regional?
We are a national platform. Yes, we lend nationwide.
Mm-hmm. And how do your rates compare to a traditional bank or SBA guaranteed loan? Is the other question.
So in terms of, we don't really look at ourselves as banks being our competitors, because banks just don't lend to the businesses that we lend. So when you think about us, we fall in between the bank rates and very, very low, much lower than the high cost online merchant cash advances
Gotcha.
lenders. Yeah.
Great. Let's chat a little bit about nonprofits. Is that something that you could access if you're a nonprofit looking to get access to capital? Is that something that Lendio would offer and provide services to?
Yes. So Lendio does help support nonprofit organizations to get loans. Again, just because it's important to know the reality, those opportunities tend to be fewer in terms of lenders who will fund nonprofits, but nonetheless, those options do exist within the Lendio platform.
Fantastic.
And just to add to that, there are a number of CDFIs that do lend to nonprofits. If the listeners go to the Opportunity Finance Network, which is the trade association for CDFIs, and put in their zip code of where their business is located, where their nonprofit is located, they will see a list of CDFIs and who lends to nonprofits.
It's a great question. It's sort of a bunch of different folks asking, industry specifically. Is there a resource on either of your websites that folks can look at to see if their industry, in this case, is one of a travel agency, that's something that business could apply for a loan through you? Is there a page that kind of lists these are the industries that we cover, or do they just kind of come in, fill out the form, and you'll let them know?
I can speak for Lendio. Part of our process is actually to filter lenders depending on industry. And what's interesting, we work with approximately 75 lenders who are part of our platform. What's interesting is sometimes lenders will shift their ability to cover or not cover a particular industry, right? So we don't necessarily publicize what each different lender covers in terms of industry, because that can be dynamic in nature, but our system will automatically account for that. So as lenders change those criteria, then it is reflected in the way that we filter lenders for that particular borrower who is coming through our experience.
Fantastic. Well, we are almost, believe it or not, through an hour of time together. This has been fantastic. Really appreciate all of you for spending this time today to share your insights and a little bit about your businesses with the members here on Alignable. It's been fantastic, and I hope everybody that was here took away at least one or two great nuggets of knowledge that they can apply towards their business. If for some reason you weren't able to get your question answered, you can reach out directly to Accion's Opportunity Fund, Lendio, and we will provide you with links to how you can reach out directly to the different organizations, as well as the Small Business Administration. You'll also be invited to the groups on Alignable, where you can continue to ask questions and answer each other's questions. We've proven over the past events that we've done, this has been a great resource. There's actually an SBA group there that you can ask questions about the SBA, so we'll include links to that. We will also include links directly to the Accion Opportunity Fund and Lendio in the summary that will be sent out in the next couple of days. So be on the lookout for that. So let me just pause for the moment here and just say thank you to all of our panelists today. It's been wonderful having you here. I look forward to doing this again in the not too distant future. And really appreciate you and appreciate the time devoted to helping these folks navigate.
Eric, thank you so